Hello everyone, it's Monday, February 18th. My name is Liam McMahon. I'm a currency strategist over at globalfxclub.com, and I'm here today to talk to you about pound Kiwi, sort of comparing the weakest currency lately, the pound, against one of the strongest in the Kiwi, and see what sort of opportunities this cross pair yields for our trading. So please take a moment to pause the recording and read our risk disclaimer, which should now be on your screen, and then we'll get started. Okay. So we're looking today at the pound Kiwi daily chart, which as you can see has been in a pretty solid downtrend of late, breaking below these recent swing lows and starting to plunge into new lows. We also have very solid 4-day, 4 straight back-to-back red candles, a very sort of bearish setup, but also one that suggests the possibility for consolidation or retracement. And you can see we bounced right off this 20 or this 30 figure on the RSI, putting in a solid green candle as the market starts to sort of work out some of this intense bearish sentiment. But with that said, with this new break to new lows, there remains a great deal of resistance in pound Kiwi, and any rallies or consolidations are viewed as opportunities to sell. Move back to this 185 figure here, this previous sort of swing low, certainly represents the first potential selling area, about 165 or so pips above market price right now. That would certainly present the first area that bears would look to reestablish shorts. A move higher up until these, all of these horizontal lines represent previous swing lows or major areas of congestion. Any move back up to any one of these levels would present a pretty good risk-reward ratio short for a move to new lows, even as low as 177.50. Certainly, if we are lucky enough to see a rally back up to test this trend line, currently sitting right around 188.20 or so, about 500 pips above market. Of course, it'll take us a couple days to get there, so say we manage to get there basically like on Friday or Monday of next week, we're looking at about 187.30 or 186.90 as a very distinct possibility for a great short lower to eventually break these previous lows around 180.150 for a move again back down to 177.50. Certainly the moving average picture is bearish. You can see the moving average picture has been bearish for a very long time, 200 trading above the 100, trading above the 50. But until recently, the moving averages were very tightly clustered together. It's only recently that they've begun to expand and point downwards, sort of confirming this recent move lower. And certainly any one of these moving averages will provide some resistance as we rally, if we continue to rally higher. The only thing that really endangers the overall bearish picture would be a break and a close above this trend line, followed by a break and a close above the 50-period EMA, suggesting that price is perhaps turning around and looking to squeeze higher. Certainly there are fundamental catalysts that could lead to such a squeeze higher. Anything that suggests that the pound is not, or the UK economy is not in as bad shape as everyone seems to think, or on the other side, anything that suggests that commodity currencies should be weakening, major problems in China, or really just a sustained bout of risk-off sentiment might be enough to push this pair higher. But until that happens, we have to trade the trend, and the trend here is certainly strong and to the bearish side. So again, rallies and consolidations provide a good opportunity to get short. In addition to the retracement possibilities that I mentioned, it is also a distinct possibility that we may see price trade sideways for this week, moving roughly between these 181.50 lows and this 184 basically high of this green candle, and set up in some sort of a flag formation for a move lower. Certainly we'll be keeping an eye on that as well. Ideally, we would like to see the RSI work off a little bit, the pair sort of consolidate and reset for another move lower before we see a breakdown. Any sort of moves earlier in the week today or tomorrow lower, seem to me to be lower percentage plays than if we get a consolidation or retracement. But it's definitely worth considering playing those as well, considering the strength of the bearish trend. So in summary, on pound kiwi, the pound kiwi pair looks very bearish from here. Really only a move back above 188 and then eventually 189.50 looks to really threaten that bearish outlook. Rallies and consolidations, like we may see early here in the week, seem ripe for selling opportunities, and we'll be looking for eventual targets of 177.50 or so on any sort of rally or consolidation. We'll be happy to update this trade and our thoughts on this pair at any time, and I would look for one of our future articles on this site to talk about that. But certainly, if you have any questions, hop on over to globalfxclub.com. We'll be happy to answer them. Thank you very much for taking the time to watch this. I hope it was helpful, and I'm sure I will talk to you soon.